Welcome to Real Estate Radio Live, an informative and engaging hour discussing everything you need to know about the world of real estate. Your host, Tom K. Wilson, provides you with insight and guidance from his years of experience as a successful real estate entrepreneur on how to buy, sell, finance, and invest in real estate, and much, much more. Now, here's your host for Real Estate Radio Live, Tom K. Wilson.
Thanks so much for being back with us. Thanks for tuning in to our Real Estate Radio Live program, your number one source for all of your real estate needs and education. We're broadcasting from the number one business radio station in the San Francisco Bay Area, KDOW AM 1220, the Wall Street Business Network. I'm Tom K. Wilson, your host for the 2 p.m. Wednesday edition Real Estate Radio Live that comes to you daily Monday through Friday at 3 p.m. plus 2 o'clock on Wednesday and Thursday, along with my co-host Joe Kuchera. If you can't make the live show, you can catch your podcast on reradiolive.com, and you can catch my programs on tomwilsonproperties.com or on iTunes or on YouTube. We have back with us today Steve Fithian from Dallas, who will be with us on the line in just a moment. We just wanted to remind you that if you'd like to receive our weekly newsletter, please go to tomwilsonproperties.com and sign up for that. You can get a report from high tech to the heart of Texas. We have trust deeds. We have turnkey, high-quality single-family homes available for your investment portfolio, and commercial syndications, and, of course, our radio show here, which comes to you weekly. So it's nice to have you back, Steve. He has been a commercial broker for over 30 years. Steve is the owner of the Sperry Van Ness brokerage office in Fort Worth. He has Frontline Property Management, many decades of experience managing properties, both residential and commercial. Steve's a certified commercial investment member, former chairperson of the North Texas CCIM membership committee. He's won a number of awards in Texas, Commercial Transaction of the Year Award, Commercial Realtor of the Year Award. Very experienced, and certainly is a right kind of person to have on your team. I'm so glad to have him on my team. Steve, welcome back. How's the last few weeks ago when I was there in Dallas, it was still booming. So lots of cranes, a lot of construction going on.
We've been very blessed. I mean, our population, of course, continues to increase, and the job growth has been the top in the nation. So that's reflected in the construction activity as well.
Steve, tell everyone for just briefly a little bit about your experience.
Well, I've been investing. The first property I bought was in 1979, actually in Southern California. And in Southern California, I started investing in single families, condos, and then later moved up to duplexes, fourplexes, multifamily, self-storage, office building. So those were properties that I owned in Southern California from 79 up until the late 80s. And then the last part of the 80s, 88 through 90, I focused more on Texas and moved my company there, moved my management company, and started acquiring apartments in the early 90s. And then from apartments to office, retail, industrial, self-storage, and single family as well. So I guess, so my investment experience goes back to 79, and I was first licensed in California in 1986. And then licensed as a broker in Texas in 1990.
What percent of your clients would you say are from California?
Probably, just taking a guess, at least 60%. It's possible it might be even a little bit higher than that.
And that coupled with your starting out in real estate, both as a broker and as an investor, I think I've always felt helps you very well relate to California client and perspective.
Yeah, and I'm still in touch with a lot of the investors that I've had over several decades, and of course make frequent trips back there. So not involved from an ownership standpoint in California anymore, but certainly understand the market dynamics.
Steve, let's jump into today's program. We're going to focus on just do an overview of commercial properties and syndications, and then talk about the product that I liked so much. I went into partnership with you, and that we're syndicating the retail center there in Dallas. And even if someone is not currently interested in that sort of thing, I think it serves very well as a model to understand what that kind of product is all about. What's going on kind of nationally? Let's look at the aerial view here for a moment. What's going on nationally with commercial, and I know you've liked multifamily products certainly in the past, had many of them. You've served as the broker for me on many deals. And I always like when people ask you what you like to invest in. You relate to them that it's different products at different times. So what's the marketplace look like right now with comparing, say, multifam with other commercial products?
Well, nationally, the commercial market is very healthy. For example, in 2014, national volume was $423 billion. And compared to, for example, in 2013, $361 billion. And 2015 has started off very strong. All the property types nationally are in positive territory year to date. The last two product cycles to kind of come out of the downturn were retail and then the hospitality sector. And in most markets, property prices have exceeded the last peak. And cap rates, the trend has still been very moderate to slightly decreasing cap rates. So it's a very healthy economy across the country as far as commercial real estate is concerned.
That cap rate has kind of a two-edged sword, isn't it? The higher it is, the more cash flow you get from a product. The lower it is tells you that it's a very strong market and high demand. So the trick is to find the right balance, I think.
Correct. And then one benefit we have in Texas is our cap rates are higher, certainly, than California. And that, coupled with the continuous employment growth and population growth, it provides great cash flow and then also appreciation, which, of course, we're not known for as much as California. But still, when you couple, steady cash flow with some appreciation, that makes for a very good overall return, or IRR.
As I think my regular listeners know, I studied the country in 98, 99, looking for better returns in other parts of the country, even though at that point in time all of my investments had been in California. And basically Dallas-Fort Worth came out on top, and I tell people that I think today on a relative basis it's even stronger than it was when I selected it. Some of the things, let's talk about a few of the things just for a moment that we like about Dallas and Texas, why we like that. And I think my listeners should know that I chose that region just before I met Steve. And so it's not just a matter of Steve talking me into it. In fact, Steve, you were looking at various places to move your business, and you chose Dallas for its economic strength, not just because you had lived there, which you had not.
That's correct. I was concerned about the property value that had gone through 85, 6, 7. Felt that the prices would fall, and so I was looking at various places across the nation. Actually ended up buying an office building in the Denver submarket. But all the research that I did just kept pointing me to Texas. And so I just started spending, I was already familiar with it from past careers and other industries, but I just started spending the majority of my time in Texas, from Houston to Austin, San Antonio, DFW area, doing due diligence, looking at properties, making offers. And for me, I just decided on the Dallas-Fort Worth area. All of them have done marvelously well during the couple decades that I've been here since then. But what I like about the DFW area is specifically their economy is a lot more diversified than any of the other major cities in Texas.
Yeah, it was certainly one of the things that always concerned me about investing here in Silicon Valley was the kind of singular economy. It's certainly a lot broader than it was, but it's still very tied to NASDAQ. And it turns out that Dallas-Fort Worth actually, its economic sectors very closely mirror that of the U.S. as a whole. So that's very nice and diverse. Speaking of your earlier careers, I might mention to our listeners here that that you were a CPA and had a financial accounting career for a while.
Right. So both with, I guess I can mention their names, with Ernst & Young and Coldwell Banker, I traveled to Texas on business for quite a period of time. So the good news is I did have some familiarity with the state, and it also helps, I guess, that I married a girl from Fort Worth. So in that regard, I have those ties as well.
That pretty well nailed that deal, huh?
Well, I wouldn't have moved to Texas just for that. It was a combination of the real estate environment.
Right. Let's just review briefly the things that we like about Dallas is that on the protecting your downside, DFW, if you look at housing prices, which is one metric, that dropped the least of any metro in the United States. That look at Case-Shiller data, it shows that. In fact, it was the only single-digit drop. Everyone there, of course, felt it was the sky was falling, but relative to other areas, it was relatively safe. And fortunately, I wasn't highly leveraged, but all of my products that I own there did not drop that much, and so unlike a lot of investors who were heavy in that sector, I didn't lose anything and didn't really even come close to it. They all continued to cash flow, which when properties are cash flowing, no matter whether it's commercial or houses or what it is, then you don't need to worry so much about what's happening with the actual prices. So 3.8% job growth last year, amazing. Texas in general supplied 1/3 of all new jobs last year. Dallas is the business capital of the South, and very similar to like San Francisco is for the West. Very business friendly. We just think it's one of the best places to invest, and I'm very delighted in continuing to do that with products that you find. So when we come back, we're going to do a little overview on advantages of commercial products and syndications, and then have a couple case studies for you. Steve Fithian, a very experienced commercial broker in the Dallas-Fort Worth area, on the line with us today. And when we come back, we'll go into some more details about commercial syndications. Nice to have you with us, Steve. Stay with us, listeners. We'll be right back.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for today's edition of Real Estate Radio Live, Tom K. Wilson.
Thanks for being with us today. We have on the line from Dallas, Steve Fithian, a veteran investor, veteran commercial broker, and who owns a Sperry Van Ness brokerage office and a property management company in Dallas, and has been my broker of preference for 16 years. I should probably both disclose and praise that we've done something like $50 million worth of business together, Steve. That's a lot of transactions, and certainly been a great track record. And I must say too that I love the way, with your CPA background, you do just a phenomenal due diligence. I've never seen anybody analyze a deal any more closely, and I always like telling people that you've told me more deals to walk away from than to do, and that's the kind of person I'm delighted and proud to have on my team.
Thank you. I appreciate that, Tom.
Let's So why do you like commercial right now more than multifam in this market?
Well, I mean, my heart, frankly, is with multifamily. I mean, I've been an investor in multifamily for many years, and it does have a lot of positive attributes. On the other hand, at this moment, the cap rates are so low. There's so much investor demand for multifamily that the pricing has just skyrocketed, driving the cap rates down. And so it's just difficult to make cash flow. And frankly, that's what the major motivation in taking me to Texas was cash flow. So, I know that the market will change, but over the last 24 months, I've been a seller of my multifamily product. And one example is a Class A property that we had that we sold last August, and we sold it at a 6 cap. And then we did an exchange. That partnership did an exchange into 2 different assets, an industrial building at a cap rate of 7 3/4, and then an office building with a cap rate of 9. And then we got attractive fixed-rate debt on both of those assets, so we leveraged those returns. So that's, I guess, the best example of why I favor commercial more now, is that I feel that the opportunities are more, there's less competition, and there's a window of opportunity in my mind as far as with these attractive commercial rates. So that, in a nutshell, is why I have the interest in commercial right now.
Why is there less demand in commercial than multifam, or maybe the question is the other way around? Why is there?
Well, let me just characterize it that both of them are in demand. The Texas has been very popular with investors, so there's a lot of investors here looking for both commercial and multifamily. So, but that being said, you still have, in any market, you have more investors in residential. It's typically the first market that an investor gets into. It's the easiest product type to master from a knowledge level, and so you just always have more activity. The financing is more familiar to investors because it's more similar to the financing that they have on their own personal residences. So there's a lot of reasons why in any market there's always more activity. And then it also gets a lot of press, and then the press, seems to drive more investor interest in it.
Mm-hmm. What's the on a relative basis, it's a little bit more under the radar, if you will, and therefore, if you have a team that knows how to find them, buy them, and manage them, you've got an opportunity for this kind of product that others don't get exposed to.
Agreed. I mean, it is more of a complex product type. I mean, depending on what type of commercial property that you're purchasing, the leases especially are a lot more complex. Everything from triple net leases, percentage leases, and then in addition to just the complexity with the leases, you're dealing with tenant improvements and leasing commissions. There's a lot of ancillary income that can be developed with commercial properties, from oil and gas revenues, cell towers, antennas, billboards, ATMs. So, that's part of why I like it. I feel it's more challenging, and I feel that there's more upside, with the commercial properties. So yes, that's what I'm pursuing in a market like we're in today.
Great. As soon as we come back, we're going to walk through a little bit more of the benefits of commercial and then start to talk about syndications. We have with us today Steve Fithian from Dallas. He's calling in. We've 30 years of investment and commercial brokerage experience. He has a Sperry Van Ness office there and also a property management company. You're listening to Real Estate Radio Live on KDOW 1220 AM. We'll be right back.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for today's edition of Real Estate Radio Live, Tom K. Wilson.
Thanks for being with us. Steve Fithian on the line from Dallas. 30 years experience as commercial and residential broker and investor himself. as well as property management. Steve, let's round out the commercial with maybe some other benefits. Of course, just having a higher cap rate and having a little bit less competition is reason enough to be on this product. What other things can you say that you like about it?
Well, typically, compared to residential, it typically has a higher cash flow, and the property appreciation is driven by increasing the net operating income, referred to as the NOI. And there's just a lot of ways with commercial property that NOI goes up. The leases are typically long-term leases. They typically have renewal options and annual bumps in the rent. So that tends to cause, again, the income to increase, which drives the value up. And then another big plus is a lot of those leases are what are referred to as triple net leases, which means that the tenants pay for a reimbursement for operating expenses. So if operating expenses are going up, that is typically passed on to the tenants, which, again, is different than, say, a residential investment. They're easier to manage, in my opinion, because you have a larger asset in place, and so there's very good professional management that is available.
More sophisticated tenants, probably.
Right, exactly. More creditworthy tenants in a lot of cases. And it's also a good inflation hedge for the same reasons that we've mentioned. In a market where inflation is going up, you're passing on that risk and expense onto the tenant.
Boy, not having to predict the maintenance and tax and insurance costs for the return on investment is certainly a big one, I think, that makes it a lot more predictable than other kinds of investments.
Indeed.
So that's great, and I think a lot of listeners would say to themselves, wow, that's really nice, but, all I can afford is buy a few houses. Why are they even talking to us about retail? And that's where the whole concept of syndication comes in. So, Steve, maybe tell folks just briefly what a syndication is, and let's start talking about the advantages of that.
A syndication is very simply a group of people getting together to accomplish something. So in commercial real estate, the meaning of that is that typically you have a promoter that has the experience and is locating the property. So he puts together the investment and then looks to get a group of investors to come in to supply the capital. And so this group, it provides lots of benefits for a passive investor that, for example, is busy in either work or even, frankly, just wants to use their spare time to have fun. They can invest with an experienced syndicator who is local to the property, understands that particular product type, and has the expertise to run the show, even set the business plan. So it also, there's a lot of other subtleties that are nice about it. It enables an investor to greatly diversify their portfolio because most syndications are available in unit sizes that are very attractive and low, and so you can spread your risk amongst different commercial properties. You're typically able to purchase a higher quality property than you could investing on your own. Back to management, professional management is very available on these large commercial properties.
Steve, let's continue that after the break here on management. This is Steve Fithian from Dallas talking about commercial syndications on KDOW 1220 AM. This is Tom K. Wilson, Real Estate Radio Live. Stay with us. We'll be right back.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for today's edition of Real Estate Radio Live, Tom K. Wilson.
We're Pleased to have Steve Fithian back with us today. He's calling in today from Dallas, an experienced commercial broker and investor from there. So we've learned that advantages of commercial in this particular market, advantages of DFW we've talked about, retail centers as a good example of a commercial product. That's something that can give a good cap rate and easier to manage and better quality tenants is something that's nice, but a lot of people think they can't afford that. It turns out if you find a good syndicator, you can. In fact, you and I have just closed on one product and a suburb of DFW called Burleson, and that was a $2.5 million center. We raised $1 million for it, and people could get involved in that and buy shares for as little as $50,000, which might shock some. And now we have a new retail center that Steve found. Because of his relationships with over all these years, he gets a couple hundred deals a day across his desk to filter through to find the diamonds in the rough. And the newest one that he's found is in another suburb called Forney, 19 miles from downtown Dallas, $4.5 million. We're raising $1.55 million for that. And again, for $50,000, someone can be involved. This one requires accredited investors. Steve, tell a little bit about what you like about the Forney Retail Center.
Well, there's quite a few sales points I think that are very positive on it that it got my eye. It's right on a state highway. It has a good frontage from the highway. On one side of it is McDonald's. On the other side is an Applebee's restaurant. McDonald's is known in the industry as doing superb site selection. So the fact that McDonald's chose that location, I think, speaks volumes for this particular location. The city of Forney has just grown like crazy. I mean, 200% population growth over the last decade, and there's active development as far as additional rooftops. They've been building an average of over 500 homes a year in that area. And when you have a retail center, I mean, what drives the success of those tenants are the rooftops. So, and the age of the property is built in two phases, 2006 and 2008. So basically we have a well-occupied retail center with great visibility in a city that has very high growth.
And currently, so there's 14 tenant spaces in there. It's fairly newly built, path of progress city, surrounded by national brands. I went and took a look at it, liked it so much, we decided to do this one as well. And
correct. Also, just to mention a little bit of the demographics in that area, average household income is anywhere from $85,000 to $100,000. I say giving that range because it depends on whether you look at within 1 mile, 3 miles, or 5 miles of the center. And within 5 miles of the center, there's 48,000 population. So a good population there, but already, but in addition to that, there's room for additional growth, and proven growth has occurred there over the last decade.
Currently 90% occupancy and cap rate 8.2, which is very strong for a metro that has the kind of economic growth that DFW does. It's not. You have to look at a lot of deals to find one that good, don't you?
I look every day for deals, every day, and the majority of them, they just go by the wayside. They're just not in my opinion, worthwhile investments.
Under contract for this one for $4.425 million to close in a little less than 4 weeks. So it's ideally you'd have folks that would ante up their money and say, I hope you find something good, but that's a tough sell, and I can't blame folks for that. So we kind of have to do it the other way around, don't we? You have to search day in and day out for through literally hundreds and hundreds of deals and relationships, and you got a fair number of off-market deals too, don't you?
That's correct. The Burleson deal was an off-market deal. This particular deal, it came on the market on Friday, and I know enough when I sniff out a good deal to just drop everything that I'm doing, which I did. Went immediately out, saw the property, started doing my underwriting and analysis on it, and I wrote an offer that weekend, and I still was not the first offer that came in on the
That's
property.
amazing.
And then as I was negotiating on the property, the offers continued to come in. So it's a very vibrant market, and finding a good deal. I mean, again, you have to know what you're doing and be willing to move immediately.
I'm as excited about this one as the one we just closed before. It looks to me like it's a very high return with a relatively low risk. I think that's what investors should look for, is a high return risk ratio. You agree?
I agree, and just to kind of point back on a previous comment I made about a window of opportunity. So we've got the benefit of a strong cap at 8.2%. We also have debt at 4.25%. So, that's when you can get debt at 4.25% and you have a cap rate at 8.2%. That really provides a nice spread.
How do you pick a good syndicator?
Well, I would say integrity is probably absolutely the top of the list. Track record. Are they properly incentivized in the deal? Do they know the economics of the region? Do they have a particular investment product type that they're comfortable with? And then, those are all very important questions of the syndicator themselves. And then drilling down to the property. What is the property that the syndicator is offering? What is the business plan? Does the business plan make sense? Does it seem that the syndicator, has the ability to run with that business plan?
Okay, and it's certainly if you're in the right metro and find the right syndicator, have comfort in their track record and integrity and their ability to find a really good deal, right? You can go on the national websites and find deals, but by the time they get there, they're usually not very good. You got to find it sooner than that. We have with us Steve Fithian calling in from Dallas, who's an experienced investor and experienced broker, both residential and commercial, and talking about the kinds of products he's finding in that metro these days. We'll be back with you in a minute to recap on KDOW 1220 AM.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for today's edition of Real Estate Radio Live, Tom K. Wilson.
Thanks for being with us today, and thank you, Steve, for being with us. Steve is calling in from Dallas. He's an experienced commercial and residential real estate broker and experienced investor himself, which I always tell people is very important for all the professionals on your team. Make sure they have personal experience with whatever it is that you're engaging them to do for you. So, Steve, let's recap a little bit. So DFW we still love because it's the fastest growing economy in the country. It dropped the least during the crash, so it's had a history of very low downside risk. And the population is booming, and every time I go to visit, my jaw drops again on all the infrastructure that's going up. Maybe we should mention that if anybody's concerned about the oil price drop, Dallas, Fort Worth is only tied 3% to that economic sector, and there are others that benefit from it. Commercial products are better right now, higher cap rates than multifam, and they tend to get more better return on investment. You have higher quality tenants and longer term leases, and the tenants pay the insurance, taxes, and maintenance. And syndication allows you to have a very small investment into a high quality product that normally is only reserved for institutional or larger investors. And to find the best, but you want to, of course, find the best syndicator, someone with a lot of experience and integrity. Anything else you'd add to that, Steve, in the minute we got left?
I think that's a very good summary, but you threw out the oil question, so I'd just like to make another comment on oil. In the DFW area specifically, some of our biggest employers are airlines. Both Southwest and American are located here. And then we also have one of the largest railroads, Burlington Northern, which is a Warren Buffett company, is located here. So even though we only have about 3%, the decrease in oil prices will actually benefit some of the employers that are large employers in our area.
Good, thank you. If you'd like more information about commercial products, syndications, this particular product that's available right now for me, go to TomWilsonProperties.com, or you can call us at 408-867-1867, 408-867-1867, and inquire. We'd be glad to get you more information, be glad to connect you up with Steve if you want to have a more input there. Also sign up for our newsletter on TomWilsonProperties.com. Report from the high tech to the heart of Texas. Go through the methodology of how I choose a region and product to invest in. We have trust deeds available for folks. We have single family home products if you're interested in buying that, not quite ready for commercial or syndications. We still have those. And this is our second syndication with Steve. I've done others, and Steve has done many others before. But those are some of the products and some of the education available. You can go to the TomWilsonProperties.com and look at the different tabs. There's a lot of education information that's available. Steve, thank you for being with us today, and nice to have you back. And we'll look forward to having you back again in the near future.
Sounds great. I look forward to it.
Always great to have you with us here on Real Estate Radio Live on KDOW 1220 AM. Remember, the only thing that matters is what you do next.
You've been listening to Real Estate Radio Live. For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Tune in, log in, download our podcast. Discover more at RERadiolive.com. RERadiolive.com.